So let's talk about crypto payments, which is a boring concept, but if you're watching this video, that means you're probably a more astute person, really deep diving into this concept. So it's 2025 right now, and there's some massive shifts happening. Whether you follow the political events happening, whether you follow the things globally, you start realizing we're making this financial shift. Okay. And this is not some doomsday video or anything like that, but essentially you got to understand there is some shift happening. Just like how in 2020, we went from being in person all the time to watching things remotely and meeting remotely. Well, it's the exact same shift that's happening with payment processing. So what I want to do is break down this video, the step-by-step process when it comes down to accepting crypto payments in your business, and some caveats to actually look for. And if this is your first time checking out my channel, make sure you hit the like and subscribe button, just because I provide as much valuable information as possible for you to be successful. Okay. So just to take a step back, when you start talking about payment processing, typically we're talking about Visa, MasterCard, Amex, Discover, traditional payment rails, as we call them. So essentially the way you want to think about it is this. If you're not using physical currency, there is a fee to transfer the money. So it might be that you're using Apple Pay, you might be using Tap to Pay, your regular card, magnetic swipe, whatever. But for that money to move, there are transaction fees along the way. So there's usually different companies. There's what we call sponsoring banks, ISOs, etc. There's all these different levels of fees that start getting tacked on. That's why when you actually get those points for your credit card, you actually realize that it's not magical. It's usually the merchant that gets charged for that. Okay. And then you start running into things like chargebacks. So if you decide, not you personally, but if somebody decides that, maybe that product was up to their specification or whatever, the actual merchant carries that risk. So in 2025 and beyond, what we're starting to see is there is this mass adoption with crypto in general. And a lot of it has, I guess you could say that the wildfire has been ignited and it's gone faster because of our current presidential administration. But essentially, all the factors are leading to, hey, we're moving more towards crypto. And this is not saying we're going to get rid of legacy systems, but essentially the way you want to think about this is there is going to be a lot more adoption of these things. So you want to position yourself to take advantage. And again, you could be a business or a merchant that's looking to simply accept this, or you can be actually looking to make this as a business opportunity for yourself, which is being that middleman and earning those percentages. So with crypto payments, the way you want to think about this is actually pretty simple. The original way to accept crypto payments is literally just having your own wallet and having somebody have their wallet and send it to you. But if you've been in any type of space with crypto, you start realizing that becomes a little complicated. Here's the reason why. Number one, those digits, the actual characters that are your wallet address, man, those are hard to remember. Like, I don't know anybody that's memorized that. And the other thing is if you're off by one letter, your money disappears. It literally goes into the abyss. You're never getting it back. So now we start running into risk, okay? And that's the risk of self-custody, but there's also some benefits there too. Now what you want to start thinking about is at scale, because if you're just transferring funds, like a bigger amount, like if I'm sending you $1,000, well, not a big deal because it's a one-time thing. But now think about that queue, that line of people that are paying $50, $100, etc. That doesn't really make sense for you to manually type in your wallet address, or somebody might say, well, I'm just going to scan the QR code. That's awesome, but then you have to manually check for it to happen. You actually have to check the Explorer and see, okay, did that transaction go through? Was it the right amount? Is it actually calculated to the actual exchange rate right now? So you start seeing how there's some complexity. So while that's the original way to accept crypto payments, you start realizing very quickly it's not scalable for any type of business. So now you also run into the X factor, which is employees, because say you're not there. I was talking to a merchant the other day, and they sell some expensive merchandise like clothing that could lead to like $3,000, $4,000, $5,000, $10,000. So whenever somebody wants to pay with crypto, they actually have to call the owner and say, hey, what's your crypto wallet address? And the owner has to say, well, what crypto are they using? And then there's this back and forth. And then you have to have that trust that that customer is going to actually know the right thing to send at the right time for the actual right exchange amount. And they don't mess it up, because now you're talking about $3,000, $4,000, $5,000, $10,000. So essentially what you realize is that's not scalable, but there's inherently some flaws. It doesn't work for a retail or a business environment. Hence, you introduce crypto payment processors, gateways, or whatever you want to call it. Essentially, all they are is just that middleman right in the middle. So you have the customer, you have the merchant, you have the amount that they want to pay and the type of crypto, which is another factor, and you have that person in the middle that makes it much simpler. So when you start looking for the companies to do this, there's a few different options. So one of them is Coinbase Commerce. They do it online. They don't approve all merchants. It doesn't work for many retail situations, but they do the exact same thing. So they'd have a QR code, you scan it, it sends it to that address, and you'd know when it facilitates. But let's just break it down into the factors as to why you would start looking towards this and how you'd implement. So usually what we found the case has been is usually higher risk merchants. And if you are a merchant like this, you know what I'm referring to. Or if you start selling like higher ticket packages or service-based businesses where you have chargeback risk, or you just want to start accepting additional payments and you start adding in another revenue stream. Well, the factor that you have to consider is how are you going to make it scalable? How are you going to make it simple enough for a customer to actually go in, make the payment while you're not there? That's why you usually have to introduce some type of payment processor. The simplest method that I found, as much as I've been following crypto for a decade now, I'm a geek, I love it, but when it comes down to it with business, simplicity scales and complexity fails. So the simplest method that I found is you would actually have some type of device, something similar to this, which is really just a tablet, just so you know. You'd have some type of device just like this, and on there, it would have software that automatically converts to crypto to your fiat currency, whether it's US dollars, euros, whatever country you're in. So the customer would go to the counter or wherever that payment occurs, and then the customer would choose what type of crypto they want to pay in. So just like your employee would type in the amount they get charged on their credit card, it's the exact same thing with this. They charge in the fiat amount or the amount in your local currency. So say it's $500. The customer would choose what type of crypto they want. And then what they get is a QR code, which is just a wallet address, a temporary address that registers that transaction. The customer would get their phone out and transfer the funds from wherever they have it, whether it's Coinbase, Trust Wallet, or whatever. They would just use their native application. They would send the funds. And usually within about 10 to about 30 seconds now, because things have gotten very fast, you would have an immediate confirmation and some type of receipt that gets sent out. Whether it's a receipt printer, just like something like this, where you actually have the receipts being printed out, or it might just be a digital email receipt, which is what most customers want also, or text message. But the software provider, that payment processor, is the one that facilitates that. And then on your end, there's a few options. Option one usually is going to be that you're accepting in your fiat currency to make it simple, because there's fluctuations in the price. You don't have to deal with you selling a notepad, for example, for $5, and now the price of that crypto has gone up or down. So now you don't know if you actually profited. So usually you're going to accept it in that fiat, so it actually converts immediately. So you just know they paid $250, there's a fee obviously in the middle, and you get $250 in cash. The other option, depending on the type of payment processor you use, is actually going to be when you can actually accept it in crypto too. Because maybe you're a long-term investor. Maybe that merchant is an investor, or they see the future of like owning these crypto assets also for their business. It doesn't matter the goal, but you can actually just directly accept it. But the biggest difference, because the question I'd ask is like, well, why don't I just accept it directly, is that it's scalable, meaning that all the transactions are happening without you being present. It's simplified. There's some type of dashboard that shows the transactions that occur, the cost basis, the receipts, the customer's name, all that good stuff. So all we're doing is blending crypto side with traditional finance. And when you do that, you'll have devices like this that are what we call legacy devices. You start to sync them together and you realize you're actually not doing anything crazy. All you're doing is saying, hey, I have this currency or this crypto, I want to convert it into something that you will accept, and I need a receipt for doing that. And once you realize how simple this is, you start realizing how adoption starts becoming faster and faster, and some of the biggest crypto exchanges and some of the biggest payment processors are already leaning towards this for that reason, because number one, it's the direction we're going as a society, and number two, it's just a simple add-on to businesses to add additional revenue. So if you need help with any of those steps, make sure you click the link in my bio. There's gonna be some additional videos. I'm pretty sure there is gonna be like a PDF breakdown for you also. But again, if you like something like this, or if you have any questions, make sure you comment below, because I do check the comments and I'll respond. But make sure you hit the like and subscribe button. I'm trying to provide as much value as possible to make sure you can take this journey, whether it's financial technology like this, whether it's investing in general, or running this as a business, either way, so that way you can be successful.